This is episode 1141.
Do you focus AI on integrating technologies for efficiency and expansion of margin? Do you focus AI more on, say, revenue expansion and pricing? Or do you focus AI in some other mechanism? If you try to do it across everything all at once without some collective objective that you're trying to achieve, it can get away from you. And we've even seen a need to kind of corral people on their interest and anticipation and get them honed in a collective way as to here's the tools, here's the objective, let's start figuring out how to plug things in.
What happens when a finance leader steps out from behind the spreadsheet and decides to rebuild an entire industry from the inside? That's exactly what Erik Wissig did. After years advising healthcare and tech firms on transactions, he crossed over from banker to builder, just as new regulations began shaping the health benefits landscape. Today, at SureCo, he's not just managing numbers once again, he's challenging the way employers think about healthcare altogether. In this episode, we explore what it takes for a CFO to drive transformation in one of the most complex, policy-driven markets in America. Our talk with Erik Wissig begins after this.
It's planning season again. Do you feel prepared? You're not alone. Many finance pros like you feel the pressure this time of year. But with the right tools, it really doesn't have to be so stressful. Introducing the annual planning checklist from Planful, a game changer for your 2026 financial planning process. With this checklist, you'll stay organized, reduce errors, and maintain confidence throughout the planning season, setting you and your team up for a successful year ahead. Don't let planning season get the better of you this time. Get ahead of 2026 by downloading the annual planning checklist from Planful now.
Hello, Erik Wissig is with us. He is COO and CFO of SureCo. Erik, welcome.
Thank you. Thanks for having me.
So, Erik, as you know better than most, you have joined us in the past, but I'm going to ask you to once more take us on that journey that led to the CFO office, and in your case, you're the COO and CFO. Take us back. What were those experiences that led you there?
Yeah. So my career, I started off early on, very interested in, public markets and analyzing stocks and this sort of thing. And that led me into an investment banking career that went on for about a decade. And really did that located in Los Angeles and focused on middle market, very much family grown businesses, transactional in nature, helping them either sell their business, do an acquisition, or some form of other corporate transaction. And so worked with, I would argue, hundreds of different companies. And over time, that began to focus more and more on very dominant healthcare and technology businesses. And so getting into that environment taught me very much about the different nuances across different types of businesses and the importance of focusing on, financial structures, managing the different stakeholders across the business. And so in doing that, I really realized that, and it really profiled the nature of the problems within healthcare and piqued my interest to lean much more deeper into that, which kind of prompted this idea of, hey, I've been working in banking for all these years. I've been sitting there telling people, hey, here's what you should do, but I had never done it myself. And with that, really found a passion to pursue opportunities in healthcare and transition into an operator role to build a business predominantly on the earlier side and grow it from there.
From when you do step into the operations side of the business, tell us something about that. I mean, what were you recognized for at the time? Were you more of an operations executive than finance, or?
Yeah, I'm I guess you could say I'm a little unique, likely relative to a lot of career path of coming into the CFO position, because I did not come out of a CPA accounting background. Coming out of the investment banking background, you're obviously much more focused on financial planning, budgeting, forecasting, transactional. And so I found myself very much partnered with the CEO and the other CEO, focused on growth of the company, very much metric analytics, and less around quarterbacking the financial reporting, financial statements, and realized pretty early on from my experience that in getting into that position, you have to very quickly realize where your strengths are versus where your weaknesses are, and hire into your weaknesses. And one of the things has always been for me is make sure I have a very, very good CPA with me in order to round out where the background that I didn't come out of.
Now, were you also, you've been a founder in the past as well, is that right?
Yeah, absolutely. So about 12 years ago, I had an opportunity to co-found a company called Hixme, and we essentially identified that the Affordable Care Act, i.e. Obamacare, changed the world in health insurance. And with that, it changed the ability for individuals to buy individual health insurance plans. The concept then was, hey, if this is now something where people can go out and buy plans directly at a quote-unquote affordable rate, why do employers have to provide a group plan structure for their individuals? Why don't we just enable employers to provide individuals a set dollar amount for them to go buy their own insurance? And so we founded a company based on that premise back in 2013, and really built that from scratch, from the initial, say, 3 people all the way up through, I would say dozens of us on the team, with raising capital and managing that capital along the road for growth.
And is it SureCo, your current company, they acquire Hixme, is that right? And how did that work exactly?
Yeah, so the nature of the business that we were developing, as you can imagine, is very tied to the regulatory market. And so early on, we realized that the model we were pursuing didn't quite have the regulation in place to do it such that it was on a pre-tax basis, as you would get a benefit in a group plan structure. So one of the things we had to do was pursue not only building a technology platform to assist employers to do this, but we also had to work with the regulatory agencies to get the call it laws or regulations in line to be able to provide this model. In doing that, lots of things happened. We went from an Obama administration into an anticipated Clinton administration, which then landed to President Trump's first administration, which then actually arguably facilitated the evolution and the ultimate passing of the current regulation that our model is based on. It's known as ICHRA, but what it is an individual coverage health reimbursement arrangement. And that effectively said this model where companies provide reimbursement for their employees to buy health insurance and potentially other medical expenses, support them in that regard on a pre-tax basis. So in that process, Hixme had really kind of ran into limited capital opportunity. And I met the team at SureCo, and through that process, we were able to move forward and acquire the assets of Hixme in 2020 and be able to keep that platform moving, bring some of the key team members over across operations and technology, and ramp it up right as this current regulation of ICHRA was coming online in 2020.
What I'm interested in over the last 5 years, what have been some of the maybe inflection points where the startup mindset needed to give way to more formal financial systems or controls? What would you share?
Yeah, the partnering and the joining of SureCo was an interesting experience because SureCo has been around since around 2015, 2016, and had built profitable businesses around the third-party administration of health insurance plans, et cetera. And so they were an established organization that when I joined was very interested in the opportunities of this ICHRA model, but yet we hadn't done it. So the company was bootstrapped into that point and was now looking at joining with the model from Hixme on growing this business. And so it was a combination of managing the legacy businesses and the cash generated from those, as well as supporting and providing capital for a growing ICHRA business. And over time, that balance shifted to where the legacy businesses, we began to sunset those business lines and ramp up the ICHRA business to the point where we realized the opportunity that we're currently pursuing was so great that it didn't make sense to try to manage multiple businesses, and ultimately led to a recent opportunity to raise the first round of capital for SureCo, even though SureCo had been bootstrapped for quite some time.
Yeah. Now, ICHRA, as an ICHRA pioneer, let's say, or innovator, how do you explain to us the differentiate from traditional benefit administrators? Tell us what distinguishes SureCo.
Yeah. So when you think of a traditional health benefit that a company would provide their employees, typically for years, decades, what happened was a company says, hey, I need to provide health benefits. So I'm going to work with a broker and engage with health insurance companies that will create a single plan for my group to elect into that plan. Maybe there's two plans, and that's specific to that employee population, which means the employee has one, two, maybe three options they can choose from. It also means that the employer is in the middle of deciding the healthcare experience for their employees. What ICHRA has done is shifted the employer out of the middle between the individual and their healthcare experience with the health insurance company. They've really just moved into a financial support compensation structure, not all that different than a retirement 401k structure, in which the employer sets a dollar amount that an employee use typically for buying an individual health plan. And the way that works is at this point now, an individual can purchase whatever's available to them in the market. With that, typically you would have 3, 4, 5, maybe 6 different insurance companies providing half a dozen plans each. And so the opportunity of choice and finding what fits that employee and their family dramatically increases. That also means that an employee can align their a budget and appetite for cost to either a lower price plan or a higher price plan. And overall, what that does of moving people in this market, it creates cost control for the employer where they're just setting the economic compensation, but it also overall provides cost savings for both employee and employer.
We want to try and understand what drives your revenues and your margins. From your vantage point as a CFO, which levers and pricing, cost structure, customer mix will most materially drive margin expansion over the next few years?
Yeah, margin expansion, when you look at that, there's probably two biggest areas of focus that we would look at. So from a profitability standpoint, at our stage of the company, gross margin is critical because of the unit economic nature of gross margin.
Mhm.
From a expansion of that, there's two levers. One is increasing sources and the amount of revenue per customer, and then the other one is driving efficiencies at your cost of goods sold structure. So that being incorporating technologies as you scale and ramp up to be able to get a larger production from the team across servicing as well as execution. And then at the customer level, based on the ICHRA business, what we're doing is we're effectively administering the enrollment and the management of all of these insurance plans. When you think of a large company, say several hundred employees and above, where every individual owns their own plan, that's a very challenging benefit offering to manage without pushing the responsibilities to the individual to enroll in their plan, make their payment, manage when new hires are coming on, and terminations, all of the different changes. So as an administrator through our platform, we facilitate all of that activity. And in doing that, there's a lot of areas that provide opportunities for product expansion, which one will enhance the experience, but also increase the opportunity for sources of revenue for SureCo. Those two areas between enhancing the efficiency of the cost of goods sold line as well as expanding revenue, sources of revenue to one, diversify in case current revenue comes under pressure, as well as increase overall.
Curious about also capital allocation in this kind of high growth environment. How do you prioritize investments? Is it tech? Is it sales? Is it partnerships?
It's a great question. It's an interesting experience, and those who have grown companies and raised capital and gone through cycles understand that you go through these cycles of preservation of capital in order to get to the next capital event, and then you reach the capital event and you shift into a more aggressive deployment of capital, and you're always balancing the need to hit the milestones to be at the position to raise the next round relative to the amount of time it's going to take. So when you look at establishing a plan of how much do we put in a go-to-market sales strategy relative to product expansion, relative to scaling efficiencies, I can't say there's a magic formula to that, but it comes down to, from our perspective, sequencing, right? So if the sequencing says, hey, we're at a position right now at the level of our business where no matter what we sell, we can't handle more. We're at a cap. In that case, the sequencing naturally would be, well, we need to figure out some scale solutions before we drive capital to our go-to-market and sales team. At the same time, if you're seeing, say, price compression out there because competition came in, you're going to need to look at how do I diversify revenue sources, and with that, figure out ways to invest more in product lines. So we're constantly evaluating, and because of the nature of the outlook you have to put in, we're needing to establish lines of sight that naturally are not 2 to 3 months out, 6, 9, 12, 18 months out, and anticipate where we're going to need to be. Right now, we're moved into because the market is growing very, very rapidly for this model. And so with our capital and our partners, we're able to move much more into a more aggressive position with very much a focus on technology investments to drive scale and also market expansion, partnerships, and growth of the customer base.
This is such a heavily regulated space, as you kind of illustrated for us, and it's so sensitive to policy shifts. You know, what separates your financial model, to account for that, for all of that regulatory risk? How do you do that? What is it? What distinguishes it from other businesses in that sense?
The best way to balance that is the regulatory side of it. There's a nature of what we're doing within the ICHRA model that gives a high level of confidence that it is the future and the directional path for where not only health benefits are going, but be it a key catalyst to truly changing healthcare to be a much more consumer focused direction. So that movement and that mission, while we might have drunk the Kool-Aid on that concept, that is the true power of what we're doing. And because of that, you also see that the model definitely appears to attract interest across both sides of the regulatory aisle between both parties. Partially because, one, it supports the individual market, which supports the Affordable Care Act. On the other side, it provides clear benefits and cost savings to employers. So it's very attractive across. The challenge becomes much more as things ebb and flow, it impacts the market. So right now, the market is dealing with very high expected rate increases across insurance plans. You may have seen this out in the news cycle. Part of it is driven by the nature of ACA subsidies influxed, depending on whether these expanded subsidies that got put in place in 2021 either expire or not. That it creates fluctuation in the employer perspective of, hey, how do we move to this market? How do we get comfortable that the regulation is not going to be disruptive? And so from our perspective, it's much more the nuances of the movement in the market and getting the organizations confident rather than our concern about it turning and going backwards.
So what then are the metrics or KPIs that you're watching daily or weekly?
From an operating perspective, we have a very disciplined focus on the unit economic structure of our organization. We have the way the business works and the market works is you naturally work with an employer. That employer sets a benefit, and their employees elect a health plan. And by enrolling in a health plan, you make money in a few different ways. Typically, there's an administrative fee. There's a commission and sometimes transactional revenue sources. And so watching the account, the annual contract value per an organization and adjusting the operational servicing structure in order to accommodate is something we pay close attention to as we evolve the overall model. The other one, as you would expect, is a customer acquisition cost. So as you're building a go-to-market function and you're driving awareness out in the marketplace and you're ramping up a sales team, it's very, very easy for the acquisition cost of a customer to run away from you. And if that gets too far away, it's very difficult to recover that investment.
Can you tell us something about your lines of sight into the business and whether over a period of 5 years, have you adopted, as the company has grown, become more sophisticated with technologies, ERP systems, and all of that?
No, absolutely. So we have evolved over time, as you would expect, from a QuickBooks Online basis several years back, and product I love, QuickBooks Online, fantastic, very user friendly. But you reach a point where there's complexities to the business that you need to I don't know if the right term is graduate or evolve into a more a larger company focused ERP system. We are actually looking at our second iteration at this point, based on our scaling and growth and the opportunities to leverage technology and both traditional analytics as well as evolution into the AI direction and moving to, I guess, our next version of an ERP platform, and one that takes those insights based on the data generated across our product developed platform, our CRM platform, and then our ERP platform. We're in the process of I guess iterating that in order to capture the line of sight for the growth that we're having, because the growth across our market is exponential based on the adoption of this, new regulatory benefit offering.
Yeah. So as you sort of take your technology platform to the next level, or the internal platform to the next level, is AI obviously accelerating your move to do that? I mean, is there you realize the investment required to leverage AI? Now's the time. We should move forward. And a lot of people have done the hard thinking about the finance function and how AI can augment it, I guess. Am I close to what you're thinking, or no? Tell us a little bit about it.
I think it's 100% a question of how, as opposed to if, because, AI, when you look at the breadth of what it can do, I mean, look, anybody's played with a chat GPT type of, and has been amazed likely at what can come out of it. And so the nature of looking at all the different ways AI can plug in through different platforms and where to focus that effort to be effective from an organization is really more the trick. So be it, hey, do you focus AI on integrating technologies for efficiency and expansion of margin? Do you focus AI more on say revenue expansion and pricing, or do you focus AI in some other mechanism? I think the challenge, what we would say, is if you try to do it across everything all at once without some collective objective that you're trying to achieve, it can get away from you. And we've even seen a need to kind of corral people on their interest and anticipation, and get them honed in a collective way as to, here's the tools, here's the objective, let's start figuring out how to plug things in. My initial perspective is there's a ton of opportunities around service heavy areas of the business where you can not only increase the time an individual is actually face-to-face interacting, and dramatically reduce the back-end work that people end up doing, and then also layering in AI to reduce the more lower level type of inquiries that people need. So being able to do that dramatically increases the scale opportunity, but that's just one of many that we're looking at.
What about your own finance team? How are they using AI today?
Yeah, I mean, our finance team is a little bit, I wouldn't say slow, but we've been hesitant to drive too fast into AI. I think, how would I put it? There's a bit of we need to make sure that it doesn't send us down the wrong direction when it comes to decision making from a finance perspective. I think and we've incorporated opportunities from procedural. How do you gain insights, and how do you make sure ways to say We've looked at ways to optimize working capital better from an AI standpoint. But we don't move very fast in that regard because of the sensitivity of getting it wrong.
What challenges or risks concern you most about the adoption of AI inside this space, inside the benefits administration? What challenges or risks concern you most about adopting AI?
Yeah, the business that we're in assisting access and opportunity for people to maximize their healthcare experience doesn't have a lot of tolerance for error in it. And so if the market broadly moves to, say, recommendations on which health insurance plan, how to manage conditions based on what they're selecting, there is a high risk that could kind of run off the tracks. And so because healthcare experience for everyone out there, nobody can avoid it, you have to make sure that experience doesn't send somebody down the wrong path. So even with AI, I think it'll be foolish to move too fast to where it's not AI plus still an individual involved that's making sure that AI supports what the recommendation would have been if it wasn't involved.
Well, thank you for that. We are up to what we like to refer to as our finance strategic moment question. And again, this might have happened anytime during your career. And we're just looking for one moment of insight that you could detail for us from the past. Anything come to mind?
Yeah, I would say one of the triggers that I realized early on from a finance perspective is coming from a finance world and accounting world, we know our technical skill very well. We know what we're observing, and what we don't always realize is that other people have a different expectation of how things work. And so, especially in early stage companies, there's a ton of focus on growth. Oh, we're going to grow revenue, going to grow revenue, going to grow revenue. Less focus around cash flow and the balance between those two. It's very difficult to have accelerated growth and drive cash flow at the same time. So the trigger was really identifying the opportunity for me to integrate myself with the rest of the leadership team to bring them into the understanding of the balance between, hey, if we're driving growth, that means it's a use of cash. If you wanna build cash, it's likely a slower growth rate. And I didn't really early on understand the limited understanding of that nature. And so by plugging in to walk people through the nature of the interplay between those two was really an unlock. That is something I've been able to focus on for years now that I think has been very effective.
That's interesting. Was there a specific moment when you realized this is how it needs to be done?
Yeah, there was a point at one point where I realized that, hey, we're driving for growth. This would be early Hixme, right? We're driving for growth. We have limited capital, and the team is achieving a lot and performing very, very well. And with that, you have an expectation that people are going to be paid performance bonuses. People are paid incentive, but what can get lost on people is that you need the cash to make those payments. And so if you don't plan for that, if you're not anticipating and managing the flow of cash to be able to do that, you'll get caught behind. And so then what do you do with your team? You look over and you say, sorry, you got to wait. That doesn't really. So I found out a little late to the game that you need to plan a little earlier on that, and that was one that the team didn't understand either. And so by incorporating a much further outlook on cash flow, related to at that point making sure the team was rewarded and we had the cash to do it, was kind of an early trigger.
Erik, now you spent, at Hixme, you familiarized yourself with this space, and then you returned to this space. Did you tell yourself I'll never go back? What is it? It seems like you're drawn to it. You understood it better than many. Tell us something as to why you're still here.
Yeah, I might be the person out there who's done this ICHRA model longer than anybody else. It's now been 12 years, and it's become a life's mission, frankly. Early in my career, did I anticipate that I would be pursuing turning healthcare in the United States upside down through completely altering the health benefit market? I never would have expected that. But early in the Hixme days, I realized that to truly change healthcare, you need catalysts. You need things that trigger change in the market. And there's a true belief that one of the keys to facilitate true change in healthcare is to shift the nature of the overall model to be much more consumer and individual centric. We all know that most people out there aren't really understanding how this healthcare system works and how their insurance works and what plans and what they should purchase. Realizing early on that what became ICHRA is a true mechanism to put the individual in the driver's seat really became a life's mission to build this model and be one driving force, not the only one, but one driving force to be a true change maker in healthcare and put this in a position where maybe not me, but my kids, others will benefit directly from what we're doing.
It seems to me it could have been, it could have been derailed at any point during with some of the different changes in regulatory climate, uncertainty. Interesting. You stuck with it. Erik, tell us something about yourself. Something that most people might not know, your colleagues might not know about you. Something from your past, some interest that you have.
That we might not know. That's a good question. It's funny. This endeavor that I've landed on, and something I've learned out there is, as I mentioned, I've been doing this for 12 years. This has been asteroids landing, shooting at it all the time. Different administrations in DC sending it one direction or the other. And it's taken a very long time. And I've had people all the time that say, Erik, why are you doing this after you've failed time and time again, right? And I've realized that, one, there's just a true passion to make this work. But two, if you have the mindset that you haven't failed, if the game is still playing, then you're still charging for the win. And I think that's something I've developed that maybe people wouldn't quite know that perspective, but I think it's become, for me, a driving force and a power behind pushing this model, making ICHRA work, driving SureCo, and at the end of the day, really benefiting employers and individual families to have a better experience.
Nice. Thank you. Thank you for that. Hey, we're up to our final question. We want to ask you about your priorities as a CFO for the coming 12 months. What would those be?
Priorities. Okay, so priorities for a CFO, because we just raised capital, right? The priority for the next 12 months is really around ramping our go-to-market function and shifting into a much more aggressive customer acquisition model. as well as the second one is partnering very closely with my operations and product team to strategically incorporate technology development to not necessarily lean more toward product expansion, but very much scaling and ramping as we ramp the customer base.
Erik Wissig, thank you for joining us on CFO Thought Leader.
Appreciate it. Thank you.